financial landscape with the advent of fintechs, with particular emphasis on the role of digital public infrastructure and the role of the Reserve Bank in fostering innovation. Broadly, what I have done is that I will be highlighting 4 aspects. First, I will talk about digital public infrastructure, how it is a public good, and this is one of the themes which India is advocating, which India is piloting in the during our presidency, India's presidency of the G20. This is there as one of the priority areas, that is digital public infrastructure. So first, I will touch upon digital public infrastructure. Second, I will touch upon some of the institutional arrangements which the Reserve Bank has developed over the years to contribute to more innovation and to take this sector forward. The third aspect is specific policy initiatives, including some of the current initiatives which the Reserve Bank is taking, some of which are showcased in the pavilion, which have been put up by the Reserve Bank FinTech and the payments departments. And finally, I would like to touch upon a very important aspect of customer centricity, governance, and the need for self-regulation. The landscape of traditional financial services has undergone a profound shift with the advent of fintechs. This transformation has significantly impacted delivery of financial services by making them faster, cheaper, efficient, and more accessible. The global fintech sector, which currently generates about $245 billion US dollars of annual revenue, which is merely a 2% of the global financial services revenue. It is estimated to reach $1.5 trillion annual revenue by 2030. The Indian fintech industry is projected to generate around $200 billion in revenue by the year 2030. This projection indicates that by 2030, India's fintech sector could potentially contribute to approximately 13%, 13% of global fintech industry's total revenue. These projections underscore the increasing significance of the Indian fintech sector. Technological innovation by the fintechs are the result of the interplay between 3 things. 1, digital public infrastructure, 2, institutional arrangements, and 3, policy initiatives. These key elements help foster a conducive environment for nurturing creative ideas and promoting new technologies, which lead to beneficial and impactful changes in the financial services sector. Let me now elaborate on each of the 3 aspects. First, I would like to touch upon digital public infrastructure. Now, digital public infrastructure is commonly recognized as a technology system that promotes interoperability, openness, and inclusion to deliver vital public and private services. The defining feature of the Indian model of digitalization is the lead taken by the government and the public sector in building an infrastructure on top of which innovative products are created by the private fintech firms and startups. In fact, India has pioneered a layered approach to digital public infrastructure with the concept of the India Stack. In this respect, the impact of the JAM Trinity, that is Jandhan, Aadhaar, and Mobile, in terms of financial inclusion, digitization of financial services, and emergence of fintech ecosystem has been extremely significant. Now, Jandhan accounts, Jandhan Yojana, all of you are familiar with it, so I don't want to elaborate on it. A copy of my address will be uploaded in the RBI website, so the numbers and the data which are there, you can, those of you who are interested may access from that. So I'm not going into too much of details of that, but just would like to mention that as per the World Bank's Global Fintech Database 2021, 76% of adults worldwide had access to an account in a bank account or a regulated financial institution as compared to 51% in 2011. That means the world average, about 51% of the adult population had bank accounts. That was in 2011. And after 10 years in 2021, 51% went up to 76% of adult population. In comparison, the percentage of adults in India who had access to bank accounts was 35% in 2011, and it went up to 78% in 2021. As you would be aware, the Jandhan Scheme launched by the government in 2014 for universalization of bank account has played a significant role in achieving this remarkable progress. So far, over 500 million Jandhan bank accounts, that is 50 crore Jandhan bank accounts, have been opened in India. Now, so far as Aadhaar is concerned, Aadhaar, which is India's biometric identity system, provides a single and portable proof of identity. As on 30th November, last, that is 2022, Unique Identification Authority of India had issued 1.3 billion Aadhaar identities, that is 135 crore Aadhaar identities. The unique Aadhaar identification number allows individuals to verify their identity through authentication regardless of their location, thereby ensuring convenient access to not only financial services, but also the various kinds of financial benefits and other subsidies which the government is extending for the needy sections. Now, Aadhaar has also enabled the fintechs to offer paperless and contactless financial services, and it has enhanced customer convenience, strengthened the security of the financial transactions, and substantially mitigated the risk of identity fraud. It's a good example of how digital public infrastructure can be leveraged for achieving public policy objectives. The third aspect in the JAM Trinity, as you are aware, is mobile connectivity. Now, the mobile connectivity in India has also grown exponentially. The number of internet users through mobile phone in India has grown from about 70 million in 2014 to about 800 million in 2022. During the same period, the number of digital transactions in India grew from I'm talking about the number of transactions. Now, during the same period, that is, what I mentioned just now, that is from 2014 till 2022. Now, during this period, the number of digital transactions in account grew from 1.2 billion in 2014 to about 91 billion in 2022. Increasing affordability of mobile phones, cheap access to data, and the expansion of mobile network coverage have spurred the growth in adoption of mobile wallets, UPI, and other methods of digital payments. Now, let me also touch upon UPI, which is now very well known, which is, in fact, has emerged as an international model and a success story. But let me also mention that, I would like to compliment the entire team of NPCI and the team in the Reserve Bank for working together to take UPI forward. Now, this is one example of public-private partnership. The UPI was basically primarily was an initiative taken by the Reserve Bank of India with the support of the Government of India. Initially, the initial push was provided by the Reserve Bank, backed by the government. And then thereafter, a separate company has been formed and which is owned by a number of banks. So the entire platform is a kind of a digital public infrastructure on which various private players, through their payment apps, they're riding on this public infrastructure. So the government creates the basic infrastructure. The public sector, RBI, I'm just putting it in that bracket of public sector. RBI strictly is not a public sector. But, it's a public effort to set up a platform, to set up infrastructure on which the private sector is now developing, is offering various payment services, and NPCI itself is also coming up with new products which they are going to launch from time to time, and I am happy that about 4 products are being launched today by the NPCI, and they in fact would demonstrate the capability of the Indian fintech sector. Now, this has, as I mentioned, the ability to instantly transfer money between bank accounts through mobile applications has actually transformed the way people make digital transactions. The interoperability of UPI across banks has created a unified payment ecosystem. Its user-friendly interface and QR code-based payments have made it very popular. It has facilitated digital payments for small businesses and street vendors, leading to greater financial inclusion. UPI has also spurred innovation in the fintech space, leading to the growth and development of other payment systems. For instance, the volume of transactions through the Bharat Bill Payment System, that is BBPS, has grown phenomenally. Similarly, prepaid instruments, mobile wallets have also witnessed higher volumes in the recent years. The success of UPI is reflected in the sheer numbers as it has scaled up in relatively a short period of time. Often we forget that UPI was actually launched in 2016. So it's just about 7 years now. And this success is reflected in the sheer numbers, and more than 10 billion transactions for over 15 trillion rupees value were carried out in August 23. The total number is steadily rising. India's technology stack has accelerated digitalization through mobile phones and internet, identity system, data sharing rails, that is the account aggregator framework, payment rails, and universalization of bank accounts. Now let me turn my focus to the institutional arrangements which have been, put in place by the Reserve Bank over the years. Institutional arrangements are also very critical for the development of a robust financial system. They undertake various functions such as research, innovation, training, advancing technology solutions, and developing best practices in financial services. They also promote stability, transparency, and fair practices in the financial sector. The Reserve Bank's initiatives in institutional building for the fintech sector in particular include, first, number 1, establishment of the Institute for Development Banking Technology, that is the IDRBT, which has been playing a crucial role in shaping the digital transformation of Indian banking industry. Second, creation of the National Payments Corporation of India, that is NPCI, which has emerged as a pivotal organization driving the transformation of retail digital payments in India. Third, setting up the Indian Financial Technology and Allied Services, that is IFTAS, an institution to design, deploy, and provide essential IT-related services as required by the RBI and also by the banks and other financial institutions. Fourth, setting up the Reserve Bank Information Technology Limited, that is REBIT, in 2016 to strengthen cyber resilience of the Reserve Bank and also cyber resilience of the banking sector as a whole. 5, formation of the FinTech department within RBI in 2022. And 6, establishment of the Reserve Bank Innovation Hub to promote innovation in financial services. Now, all these institutions over the years have played a very important role, and the RBI Innovation Hub, which is our latest initiative in institution building, the RBI Innovation Hub has been established by the RBI, but the entire leadership, the entire drive is left to the private sector. We have provided the initial support. We are, of course, 2 of our officers sit in the board of directors of the RBI Innovation Hub. But As a separate company, it has total autonomy, and the RBI doesn't interfere in its day-to-day affairs, but the RBI works in close coordination with the Innovation Hub, and one of the products which has been developed by the RBI Innovation Hub, that is the frictionless credit, the public tech platform for frictionless credit, that is being demonstrated in the pavilion put up by the Reserve Bank. If you have the time, please have a look at it. Let me now turn to the third area which I mentioned, that is the policy initiatives which the Reserve Bank has taken over the years. Now, timely and appropriate policy initiatives are absolutely important for growth of any sector, more so the fintech sector. The focus of our policy initiative in this